President of the Africa Export-Import Bank, Dr. Benedict Rama, told African leaders in Niamey, the Niger capital, at the weekend, you must not look back. This movement is now unstoppable, talking about the AFCFTA putting $1 billion of Afrexim monies in adjustment facility to help the 53 countries that are now signatories of countries to the new trade deal to have what you call a soft landing in implementing this. This is part of the developing stories around the new AFCFTA. So let's talk about the mechanisms of the new treaty and a few other things. Let's get some of these insights and perspectives into it from Egi Akpata. He is the director at the Union Capital Markets Limited. Is live to us here at our headquarters studios. Good morning, Egi.
Good morning.
It's good to have you. Thank you. Give us your first word in summary of the new trade treaty.
I think it's a positive for the continent, a positive for Nigeria, but Nigeria has to actually do actual work to benefit from it. Status quo will probably mean we don't benefit from it.
Mm. Okay. As an investment banker, as an investment market person, what are your thoughts on how to get this trade agreement working? Although it's in phases, but at least we're now on to the first phase. Where do you think our main focus should be?
I think, as a country, our focus should be on making sure that we're competitive in a number of markets. Actually not hoping that we are, but actually doing the necessary studies and the necessary work to put competitiveness in place. There's a Nigerian Competitive Council or some bodies that have been set up. How much power they have, we don't know, but clearly there are a number of deficient areas that over time will make this economy less competitive around infrastructure, power, cost of doing business generally. Because bear in mind that the countries we are competing with, a lot of them are upgrading their infrastructure. They're lower cost operators than we are. So eventually, if something is not done, they will benefit more than we would.
So in terms of the mechanisms of the new trade treaty, the flag off has taken place. The flag's been dropped, so the race has started. Everyone will have to look out for his or her own interests, technically speaking, as it were, within the same trade agreement. It's for everyone, but everyone still have to work out his own. So where do you think Nigeria should, and what we need to do? But let's talk about investment. How much investments do you think we need to make to leverage this treaty?
Well, I think, first of all, bear in mind that when you're dealing with other African countries, you need to have transport links between these countries in terms of being able to deliver goods, be it by road or by rail or by sea or by air. A lot of that investment around that has to happen, logistic investments. I think we know a lot about how much has to be invested in different sectors of the Nigerian economy, and a lot of that investment is not happening. If you take power as an example, if everybody's running generators and things like that, you will not be competitive. You need cheap grid power to eventually compete against some of these countries. You cannot be a higher cost producer and expect that you'll be able to export into countries that produce at a lower cost than you.
We need this investment, and the government does not have all the money on the table or even under the table to get it done. So where do you think this money will come from, and how quick do you think we should extract this and put them to use?
Well, I think, generally, looking just at the entire economy across the board, clearly the scale of investment needed does not exist in the country. So it has to be brought in from outside. The question is, why would anybody bring their money here? And those reasons why people might not want to bring their money here have to be addressed, and addressed quickly, because other options are opening up. You will get to the stage where you don't need to set up in Nigeria to sell into Nigeria, which is exactly what this treaty is eventually going to do. So if there are other countries nearby that are more welcoming to investment and are more friendly to foreign investment, the investments will go there, they'll produce there and export into your country. You benefit pretty much nothing.
What about domestic capital? Can we unlock that? Are there businesses and investors who are willing to say, look, I like the AFCFTA, I can see other markets outside, within and outside, and I think I can put this money on the table, I can put this investment there, I can leverage it?
Well, I think in terms of when you say domestic capital, you're talking about domestic equity capital. How much domestic equity capital is actually available? I think a lot of times there's a misconception that debt capital is something as equity capital. You can't run businesses or you can't run investments 100% on debt. So there's a lot of investments in Nigeria that is theoretically equity, but it's really debt finance. And that is not the investment you're looking for. You're looking for pure risk equity capital. That amount of money really historically cannot be in a country that hasn't been industrialized a long time or doesn't have a lot of natural resources and small populations. So given the age of the country and how long savings have been going on and savings rate, is unlikely that that scale of money is available locally. There'll be some pockets here and there, but not the kind of scale we're talking about. People refer to pension money. Most of that money has already been given to the government anyway, so it's not available.
Treasury bills and all that.
Government securities, that money is gone. It's not available. I mean, for you to get that cash back, you need to be paid your money back, or you need to sell your investment to somebody. To who? I mean, so that's the challenge. So
and at what rate?
So eventually, on the short term, your solution is to get external money. On the long term, you can save your way to start making those investments on a large scale. But on the short term, you need external money.
Do you think corporates should be sitting down by now in boardrooms and management meetings looking at the EFCFTA all over again, or more deeply and say, look, perhaps this is something here for us as an organization to benefit from private sector?
Yeah, I mean, for those companies that produce consumer goods, they should be looking both at where the opportunities for export are and where the threats of imports are going to come from. So they have to be looking at both. Those that are in services are slightly different. They're probably a bit more protected just by virtue of regulation. I mean, I don't think this treaty will allow, says you should ignore your local regulations. And so foreign firms have to still meet local regulatory requirements. And so highly regulated industries might be a bit more protected.
Okay. So if I'm producing cement, for example, is there an opportunity for me here?
There was an opportunity before this, so there's clearly opportunity for you. The question is, how cost effective is it to move cement from your plant to the market? I mean, is it by road, is it by rail, or how exactly will you get it done? So there's opportunity in terms of some of those kind of industries that have excess capacity in Nigeria and lower cost energy to export. But the logistics could be a challenge to get to significant scale.
Interesting. For those of you in the financial services industry, I'm sure you folks will be the engine, the mechanism for this. Folks have to pay, goods have to be delivered. It all boils down to the banking system, the payment and settlement system. So are you encouraged by the new payment and settlement system that Afreximbank is putting in place? Reduced dollar dependence?
Well, I think, I mean, those systems are all good, again, subject to local regulations. So obviously, at some point, central bank does step into some of these cross-border systems, but they're definitely good in terms of bringing down costs of moving money between countries, because clearly those costs are just too high and they don't encourage movement of money across, particularly between African countries.
One of the big issues that to deal with will remain the custom tariffs and all of that. These are very huge issues across countries, across borders within the continent. So how easy do you think this will be resolved by member states to lower the barriers, as it were, to get everybody to open up, as it were, to their neighbors, technically speaking?
It'll be quite difficult because clearly, I mean, if you have local industries you want to protect, those barriers are set up to protect those industries. So how exactly you get to negotiate your way out of that will be challenging. It will not be immediate because there's some countries that will push against it and there's some countries that will push for it, depending on which side of the fence you fall. But eventually, the overall benefit to everybody should be more if those barriers go. But clearly, if you're a country that relies heavily on import duties, as a government, you're not going to just release those barriers. You need to get the money from somewhere else. And where is that other place you're going to get the money from?
We rely on that. We rely on customs.
So that's the challenge. I mean, in theory, if everybody's if the overall pie gets bigger, then you should make money from other areas. The challenge for countries like Nigeria is that the taxation system doesn't work very well. So even if, I mean, companies are growing bigger, there's more business in the country, it doesn't translate to higher government revenues, which is why they go and focus on things like customs duties. So the structure of the government revenue profile will have to change, I mean, for things like this to eventually be fully operational.
Where is the most competitive advantage for Nigeria from day one of this agreement signing? Is there anything in our favor today?
I mean, bear in mind the number of companies already exporting. I mean, it's not as if there are no exports going on. So clearly, those who are exporting, even with the barriers in place, are clearly somewhat competitive. So in a number of consumer good manufacturers that have scale, because they already have scale here, they're competitive exporting to smaller countries that cannot set up plants of scale. Natural areas that we should have competitive advantage, petroleum sector, Unfortunately, that advantage doesn't seem to be in play because we're actually importing petroleum products rather than exporting to these countries. A number of these agricultural commodities that we have natural geographical advantage on should also be an area of focus, which is why the central bank is focusing on a number of crops that Nigeria historically had advantage on, but which were neglected. So those are the low-hanging fruit that at least initially can help Nigeria gain market share while developing those industries better at home.
Is population an immediate advantage for Nigeria?
It's an immediate advantage in that if you have a big home population, the companies there can get a certain size and scale that allow them export at a lower unit cost. The flip side, though, is that if you're a small country and you have this huge market nearby that you can export to without barriers, and that's fantastic for you. So it's two-sided.
Very interesting. How soon do you think we should hit the ground running in terms of those very structural changes we need to do to get this done? Because by next year, which is 2020, some of this will have to kick in. Should we start thinking with the budget? Should we think with the ERGP, or at the federal level, at the state level?
Well, I mean, I assume that obviously something is being done right now, which is why there was a delay in signing and why it was actually signed. The government will need to communicate to us exactly what they're doing. It would be surprising if nothing is being done. But clearly, some of these bottlenecks around cost competitiveness and efficiency in the local economy have to be removed. And this is way beyond talking about incorporating a company in 2 days and things like that. The actual physical barriers to doing business properly, high cost of power, bottlenecks getting to the ports, infrastructure bottlenecks, high cost of local transport, and things like that have to be addressed very quickly. But they are not short-term projects, so we're hoping they're already being done. We just need to know what they are.
Okay, let's leave it there for today. I'm sure it's still early days. We're just signing, so we're still in the mood of signing. Now we need to get to work, roll up our sleeves, as it were. Thank you. Igi Akpata, Director at Union Capital Markets Limited.